If prices keep rising, that's great for the economy. But what about your wallet? You came here for the truth, so let me unveil that for you. I think this is a really important subject. People, they're always struggling to keep up, not just with the Joneses, but with the Kardashians too. No, but seriously, we need to look at this as it relates to inflation that's coming around. You have to understand what companies are doing today. I'm going to give you some examples of that. Number one will be rising prices, okay? Number two, we're going to look at bank stocks. I want to show you what's happening and give you the charts surrounding that as well. And number three, we're going to look at real estate. Obviously a deep subject, but I want to cover some very important things. All of that and more. Let's get into it right away. Another day, another repo. In this case here, it is approximately the same as yesterday, $813 billion. This continues to go on. I'm going to talk about this later in the video, but bank stocks are going to unleash an unbelievable amount of buybacks, and that could actually send this well over the $1 trillion mark. Stay tuned for that. I wanted to show you this. The $950 billion infrastructure bill gets bipartisan Senate support. We'll see what actually happens by the time this is all said and done. We had heard $4 trillion. We had heard $2 trillion. We heard $1.8 trillion, $1.7 trillion. All these different numbers got thrown out there. Now they're trying to work with a $950 billion infrastructure bill. People would say any amount that they're going to spend on infrastructure is good. It's better than bailing out the banks. It's better than bailing out this group or that group. And you can make that argument, okay? But what you actually see, the amount of money that gets used to help you never amounts to anything but the crumbs. We'll look more into that in future videos. This is something that you need to understand, okay? I talked about this in a previous video, how the world relies on one chip maker in Taiwan, leaving everyone vulnerable, okay? TSMC is the company. Then I wanted to look at this article here. I told you this was coming. It didn't take a genius. It didn't take a soothsayer, I assure you. But semiconductor prices are expected to continue rising throughout 2021 as a combination of supply disruptions and robust demand leave their mark, and growing input costs ratchet up the pressure. They give you some examples in here, and I'll just touch on a couple really quickly. These different companies, all right, the names of them, not really relevant, between 10 and 20%. They give more examples of this company here. All of them plan to raise their prices in the second quarter. And then, of course, we have TSMC, which basically said they had the de facto price hike on the way. Okay, you've got many examples in this one article alone. And so when you have this, that might be good for some. Maybe it's the raw materials that are getting to take advantage. Maybe it's the companies that are going to get to take advantage. Look, if, for instance, the places that are selling lumber are able to make a bigger spread, well, that company is going to benefit. But in the end, out of all of this, even if prices come down, the end user, the consumer, you're going to have to pay more. Okay? Even if prices came down, so let's say everything doubled or tripled from where it was, maybe it comes down and you end up paying, maybe not double, but maybe you're paying 50% more on that product, 20% more on that, 10%, whatever it is. It never comes back down. Okay? So that's what we need to worry about in the way that things are produced and things are sold. Goods are sold in such a way that there's all these middlemen involved. And the more middlemen that are involved, which there are many, to get a product from its raw materials to you, of course, that's going to be a real headache sometimes. Look at the job situation. You could see that after it did spike up, I covered it last month. I've actually been covering this the entire time. But anyway, the point is, the last numbers I gave you the last week, you came in seeing this spike and now it has declined. So maybe it's a blip. We'll see. US GDP growth rate has looked stronger than I believe, stronger than what I believe, but anyway, that's not the point. You're seeing it right now, annualized at 6.4%. So it was 4.3 previously, then 6.4. So it's growing at this rapid rate, at least from what they're telling us. Now, this right here, just a little bit of humor, because if you know you come to this channel, not just for the truth, but also for the laughs. Federal Reserve gives US banks a thumbs up. And by the way, give this video a thumbs up, as all 23 lenders easily passed the 2021 stress test. Oh my goodness. Why do they even have those stress tests? I mean, this is a slap in the face to everybody in the industry. It's a slap in the face to you. They're never going to not pass somebody through the stress test because the rules that they put in place are designed to make sure that they pass. And so all of these banks, I'll show you right here, this is the S&P 500, but you're looking at basically the bank index. And of course, in the previous trading session, it had moved up, if you can see that right in here where I've got my crosshairs, but it has been heading upward over the past few days as well, okay? So the bank stocks looking fantastic. They are supposedly going to unleash a massive amount of stock buybacks in the next little while because they passed the stress test. Everything's looking good. Federal Reserve is going to ease up and they're going to be able to do these stock buybacks. This right here could rocket much, much higher. Okay. This happens to be, and I don't like to give tickers, but I just wanted to show you, this is the bank index ETF. Okay. That's what you're seeing, but you look at the individual stocks as well, and you could see that some are obviously going to do better than others. But the point is, when you got all this easy money going through, there's going to be some winners. Before we get into the Money GPS Insiders, I just wanted to take this moment right here to ask you to sign up to the Insiders. It is completely free. It's going to get the videos like this one right here directly to you. You're going to be able to get that in your inbox. Look, they are censoring, they are shadow banning, they're doing everything that they can to keep the truth from you. And the easiest way, the most simple way for me to get to you directly and you to get to me directly is through the Insiders, okay? Sign up at themoneygps.com. Number one, the raw materials, the shortages, the supply chain problems are all inflationary. Number two, as a result of many or some of these factors, companies are raising prices. Number three, in the end, this means less disposable income for the middle class. So there's some news right here just talking about the fact that the jobless claims fell. You've got the trade deficit rising 2.8%. And of course, the first quarter GDP growth unrevised at 6.4%. They're telling you that everything is fine and dandy. Now, is the trajectory certainly better than it was a year ago? There's no doubt. It's growing, it's growing, it's growing. But we're talking about this being on the back of some serious stimulus. That's truly, absolutely, truly not sustainable. Quarter to quarter change in real disposable personal income. Do you see something here that is, let's say, unusual? Yes, absolutely. And the point here, all I'm trying to show you by this is a prop for me to get this message out. When the government put out the stimulus, they give people paychecks. They go out, they spend it. I think I have an article here about that in just a second. Well, that's what they do. They spend it. Maybe they have to spend it on groceries. Maybe they have to spend it on, essentials, or maybe they're investing in stocks. Either way, they spend it. And as soon as that gets taken away, it runs out. Oh, here you go. You see a decline. The disposable income dries up real fast. Durable goods orders snap back in May in a sign of broad strength in the US economy. Shortages and inflation are the biggest hurdles for American businesses. Whatever you believe, whatever you're thinking, okay, this is the truth, this is not the truth, it's contrived, the end result, what I'm focused on here, the end result is your wallet, okay? Orders for long-lasting goods such as autos and airplanes rebounded in May and showed U.S. manufacturers are still expanding rapidly, but widespread shortages of supplies and labor are preventing them from growing even faster. You see all this data, okay? I'm showing you all this data, this and the couple previous ones. But as I mentioned, when you see the prices of things rising, that's good for the companies or the economy as measured by the GDP. But what about you? If you needed to buy a fridge, well, suddenly, what would happen? Well, I mean, if you need one, you need one. But if it's now $100 more expensive, $200 more expensive, that means less money for you to spend at the restaurants and wherever. That's the way it works for a lot of people. Now, if you are part of the 1%, that may not affect you as much. If you're part of the 0.0001%, that's not going to be a bother to you. All right? This is just showing you one of those individual bank stocks, JP Morgan. Leading banks set to return $142 billion to shareholders. This is huge news, okay? I didn't lead with it, but I think that you should know about it. And it's just showing you here, after clearing the stress test, money coming through. Watch these stocks. I'm going to cover this. You'll see 1 year after the Fed capped stock buybacks and dividends, the central bank is poised to lift the restrictions. We'll see for lenders that perform well on this year's exams when the results are announced on Thursday. That happened. And of course, here you have the names. They show you what's going to happen about, not just the stock repurchases, the share buybacks, but also with the dividend payout. So we'll see what happens. Hey, surprise, you didn't think that all central banks around the world were actually decreasing rates, did you? No, not the case. This now, by my count, is the 20th rate increase in 2021. And that's Mexico. They surprised, and by the way, hello to all my friends in Mexico. This is just showing you that some central banks, particularly what I've noted is the developing nations are increasing rates rather than more of the developed nations. But anybody can do this. Any country can go this direction. One of the real most important reasons why real estate has gone up has been because of interest rates. This is just something that I had covered in a previous video, but I wanted to lead in with this. Investors account for about 20% of properties purchased in recent years in Canada. You look at areas like Toronto and the numbers are even higher, okay? It is almost back to where it was when they were talking about the chaos. Oh, this isn't like 2017. You see that news all the time. Oh, this is not like 2017. Don't worry about that. But look at the numbers. I mean, it's almost there. So what does that mean for us? Well, you've got problems today because of the acceleration of prices and the frenzy, the euphoria that's happening in real estate. It's also happening in the market, stock market, and so on. But look at this. Dream home becomes nightmare for Ontario family who passed on home inspection. Why did they pass on the home inspection? Because if you put any sort of condition, you're not getting the home. This is very dangerous. And this is happening on basically all sales. If you put any condition on financing, condition on home inspection, condition on anything, you're not getting that home. That's a danger. That's euphoria. Should I invest my IRS stimulus check? A lot more people did the third time around. I just want to make the point very clear, very simple. This is an indirect bailout of tech stocks because the people receiving their stimulus check, they've got this. Invest in what you know. You've heard that one before, seen it everywhere, basically. And essentially, what do they know? Well, they know Apple because they have an iPhone. They know Facebook because they have an Instagram account. So they basically are taking money from the taxpayer and they're indirectly pumping it into these companies, okay? This is a Microsoft article. My goodness, I really want to get into this. I'm going to have to do it in another video. Check out the link in the description if you can. I'm going to do a whole video about it, okay? And this right here just shows you ProPublica, who had posted all that information about the individuals not supposedly paying enough tax. And this is another one that gets into it. I don't have enough time. I was gonna touch on it, but anyway, if you found the video informative, hit that thumbs up button. Support me by hitting the thumbs up button. It's easy. Look, if you want to be able to get these videos, you've got to, if not sign up to the insiders yet, if you don't want to get on there for whatever reason, then hit the notification bell. Hit the subscribe button, hit the notification bell. It gives you about a 25% chance of actually seeing the videos, but it's certainly better than nothing. And you actually help out because you tell the algorithm that you're interested. Okay, if you're watching the videos but you're not subscribed, it doesn't help out as much. So definitely hit that bell. I really do appreciate it. And last but not least, if you haven't seen this video already, you definitely want to check it out. Click it, and I'll see you there.